The US dollar. It's the bedrock of global trade, the world's reserve currency. Since the Bretton Woods Agreement of 1944, the dollar has reigned supreme. For decades, its dominance has seemed almost unshakable. Investors view it as a safe haven. Central banks hold it in their reserves. Yet the winds of change are blowing. The global economy is no stranger to power shifts. Empires rise and fall. Currencies, too, can lose their grip on power. History teaches us this lesson time and again. Think of the decline of the Spanish silver dollar in the 17th century, or the fall of the British pound sterling in the 20th. Could the US dollar be heading down a similar path? In hushed tones, in exclusive boardrooms, a new narrative is emerging. Elite investors, those with their fingers on the pulse of the global economy, are whispering about a paradigm shift. They see storm clouds gathering on the horizon. These are not your everyday investors. We're talking about hedge fund titans, private equity giants, and family offices managing billions. They are starting to question the dollar's long-term strength, and more importantly, they are acting on their doubts. Their actions could have profound implications for the rest of us. It's time to pay attention to the whispers. To understand why the elites are shifting, we need to delve into the forces reshaping the economic landscape. The U.S. economy, while resilient, is not without its problems. Government debt is soaring to unprecedented levels. Inflation, though cooling, remains a concern. The Federal Reserve is stuck between a rock and a hard place, trying to tame inflation without triggering a recession. These factors are eroding confidence in the US dollar. Meanwhile, the global landscape is shifting. China's economic might is growing, challenging the US's dominance. The Eurozone, despite its challenges, remains a formidable economic bloc. The rise of alternative currencies, such as Bitcoin, is also challenging the dollar's hegemony. These trends, taken together, paint a picture of a dollar under pressure. To understand the potential trajectory of the US dollar, we must turn to the annals of history. The rise and fall of empires offer valuable lessons about the transient nature of power, even in the realm of finance. The Spanish Empire, once a global superpower, saw its economic might dwindle as its silver currency lost its luster. Overspending on wars, coupled with declining silver production, led to rampant inflation and a loss of confidence in the Spanish dollar. Similarly, the British Empire, which once commanded the world's oceans and controlled global trade, experienced a decline in its currency's dominance. The pound sterling, once the world's reserve currency, lost its preeminent position after 2 world wars and the emergence of a new economic superpower, the United States. These historical examples underscore a crucial point. No currency, however mighty, is immune to the forces of change. Section 2. The Rise and Fall of the Almighty Pound. The British pound sterling's journey from global dominance to its current status offers a cautionary tale. For over a century, the pound reigned supreme, backed by the economic power of the British Empire and its vast colonial holdings. It was the currency of choice for international trade and finance, a symbol of stability and prosperity. However, the 20th century ushered in an era of profound change. 2 world wars and the dismantling of the British Empire took a heavy toll on the British economy. The pound sterling, weakened by war debts and a decline in British economic output, gradually lost its preeminence. The emergence of the United States as a global superpower further eroded the pound's dominance. By the mid-20th century, the dollar had replaced the pound as the world's leading reserve currency. Section 3. From Bretton Woods to a New World Order. The 1944 Bretton Woods Agreement established a new global monetary order, with the US dollar at its center. This agreement, signed by 44 countries, pegged the dollar to gold and made it the linchpin of international trade and finance. The Bretton Woods system ushered in an unprecedented era of global economic growth and stability, solidifying the dollar's position as the world's reserve currency. However, the Bretton Woods system was not without its flaws. In the early 1970s, under pressure from rising inflation and a growing U.S. trade deficit, President Richard Nixon took the dollar off the gold standard, effectively ending the Bretton Woods Agreement. While the dollar retained its status as the world's reserve currency, this event marked a turning point in global monetary history, opening the door to a more flexible, but also more volatile exchange rate system. Section 4. The petrodollar and its potential unraveling. The 1970s also witnessed the emergence of another factor that would further bolster the dollar's dominance: the petrodollar system. In a landmark agreement with Saudi Arabia, the United States agreed to provide military protection to the oil-rich kingdom in exchange for pricing oil transactions in US dollars. This agreement, which soon expanded to include other OPEC nations, created a massive demand for dollars, as countries around the world needed them to purchase oil, the lifeblood of the global economy. The petrodollar system has been a boon for the US economy, providing it with an unparalleled geopolitical advantage. However, recent developments suggest that this system may be under threat. China, a rising economic superpower and the world's largest oil importer, has begun to challenge the petrodollar's dominance by striking deals to purchase oil in yuan. If this trend continues, it could have significant implications for the dollar's status as the world's reserve currency. Fast forward to 2024, and there are growing signs that the dollar's preeminence is facing unprecedented challenges. The US economy, while still the world's largest, is grappling with a multitude of issues: soaring national debt, persistent inflation, and a widening trade deficit. These factors are eroding confidence in the dollar, leading investors to seek alternative safe havens for their wealth. The global landscape is also shifting dramatically. The rise of China, the emergence of alternative reserve currencies, and the growing discontent with the dollar-centric financial system are all contributing to a sense that a major realignment is underway. The elites, with their keen sense of financial self-preservation, are not oblivious to these trends. They are adjusting their portfolios accordingly, diversifying away from the dollar and into alternative assets, such as gold, real estate, and cryptocurrencies. Throughout history, the confidence of the economic elite has often served as a barometer for the health of a currency. In 2024, subtle yet significant shifts in this confidence are beginning to emerge. Traditionally, the US dollar has been the cornerstone of elite investment portfolios, prized for its stability and global acceptance. However, recent murmurs within exclusive economic circles suggest a growing unease about the dollar's future role. The roots of this unease are not unfounded. Elite investors, with their extensive networks and access to critical economic data, are often the first to sense shifts in the economic landscape. They have observed the increasing challenges faced by the US economy, such as political instability, ballooning debt, and the specter of inflation. These factors compound their worries about the dollar's ability to maintain its hegemony in global finance. Moreover, the behavior of these economic powerhouses is starting to reflect their concerns. There's a noticeable pivot towards asset diversification, with many moving away from dollar-denominated assets. This shift is not merely a financial strategy, but a protective maneuver to hedge against potential dollar devaluation. The stakes are high, and the decisions of these elites could presage broader economic impacts, potentially accelerating the dollar's decline if not managed prudently. To understand the potential decline of the dollar, one must consider various economic indicators that are currently in play. Gross domestic product, GDP growth rates, inflation figures, and debt levels all paint a picture of an economy at a crossroads. The US GDP growth has shown volatility, with recent quarters indicating a slowdown, which traditionally curbs investor confidence in a currency. Further compounding the issue is the national debt, which has reached unprecedented levels. This mountain of debt poses a significant risk to the dollar's value, as it may lead the government to print more money, leading to inflation. Already, we see inflation rates that are making everyday Americans and seasoned investors alike nervous. High inflation erodes the purchasing power of a currency, diminishing its appeal to both domestic and international investors. Interest rates set by the Federal Reserve are another critical indicator. While they have been used as a tool to manage inflation and stimulate investment, there is a growing consensus that the current policies may not be sufficient to stabilize the dollar. Moreover, the Fed's actions are closely watched by international investors who often see these rates as a reflection of confidence in the U.S. economy. Lastly, the U.S. trade balance must be considered. A persistent trade deficit suggests that more dollars are flowing out of the country than are coming in, which can lead to a devaluation of the currency. This trend, if continued, could significantly undermine the dollar's position as the world's reserve currency, prompting elite investors to seek alternatives. In response to these unsettling economic signals, the financial elite are not just passively observing, they are actively strategizing. Their approaches are multifaceted, focusing on both safeguarding their assets and capitalizing on potential opportunities that arise from a weakened dollar. One prominent strategy is the increase in investments in non-dollar assets, such as the euro or emerging market currencies, which might benefit from a dollar decline. Real estate in politically and economically stable countries is another area where elites are increasing their stakes. This move is indicative of a broader trend towards tangible assets, which are seen as safer bets during times of currency volatility. Additionally, there is a noticeable increase in the acquisition of luxury goods, artwork, and other collectibles, which tend to retain value independent of currency fluctuations. Moreover, the elite are leveraging their substantial resources to influence policymaking. Through lobbying and direct dialogue with central banks and governments, they seek to shape economic policies in ways that might mitigate their risks or open new avenues for profit. This behind-the-scenes maneuvering is crucial, as it reflects a proactive approach to managing potential economic turbulence. As traditional confidence in the dollar wanes, attention is turning to alternative stores of value. Cryptocurrencies and gold have emerged as significant players in this regard. Bitcoin and other major cryptocurrencies have been increasingly viewed not just as speculative investments, but as legitimate hedges against currency devaluation. The decentralized nature of cryptocurrencies offers a unique appeal to those wary of government-manipulated fiat currencies. Gold, historically revered as a safe haven during times of economic uncertainty, is once again in the spotlight. Its intrinsic value and limited supply make it a reliable alternative when confidence in paper money wavers. The recent uptick in gold prices and the increased trading volumes in gold futures indicate that the elites are gravitating towards this precious metal as a safeguard against potential dollar instability. This trend is not merely a reactionary panic, but a strategic realignment of investment portfolios. By balancing investments between digital and traditional safe havens, elite investors are positioning themselves to maintain wealth irrespective of dollar performance. This dual approach underscores a broader strategic diversification, aimed at risk mitigation in uncertain financial times. Looking ahead, the trajectory of the US dollar remains uncertain. Several scenarios could play out, depending on domestic economic policies, global economic shifts, and the actions of the economic elite. If current trends continue, we might see a gradual decline in the dollar's dominance, matched by the rise of alternative currencies and assets. However, it's also possible for the dollar to regain its strength if significant reforms are implemented. Measures such as reducing the national debt, controlling inflation, and fostering economic growth could restore confidence in the dollar. The role of technological advancements and financial innovations, such as digital currencies backed by central banks, should also not be underestimated. In conclusion, while the future is not set in stone, the signs are clear that the dollar is at a potential turning point. The actions of the economic elite, along with key economic indicators, will be critical in shaping this future. As we move forward, it will be essential for stakeholders at all levels to stay informed and agile, ready to adapt to the new economic realities that 2024 and beyond may bring. Imagine a world where the US dollar is no longer the undisputed king of the global financial system. It's a scenario that seemed unthinkable just a few years ago, yet today it feels increasingly plausible. the implications of such a shift are profound, with the potential to reshape everything from international trade and investment to geopolitics and the balance of power. Without the dollar's anchoring presence, global markets could become more volatile. The certainty that the dollar has provided for decades, underpinning everything from oil contracts to international loans, could evaporate. This uncertainty could lead to higher transaction costs, making it more expensive to do business across borders. For a global economy already grappling with slowing growth and geopolitical tensions, such a scenario could be deeply destabilizing. As the dollar's dominance wanes, new contenders are vying for influence on the global stage. China, with its rapidly growing economy and its ambitious Belt and Road Initiative, is well positioned to challenge the US for economic and geopolitical leadership. The euro, despite its internal challenges, remains a significant force in global finance and could gain ground if the dollar falters. And then there's the rise of digital currencies, such as Bitcoin, which operate outside the control of any single government or central bank. This multipolar world, while potentially more balanced, also carries the risk of fragmentation. Regional blocs could emerge, each with its own dominant currency and trading partners. This fragmentation could lead to a decline in global trade and investment, as businesses become more risk-averse in the face of uncertainty. It could also exacerbate geopolitical tensions as countries compete for resources and influence. A world without the dollar's dominance could also see the emergence of a new currency war. Countries, seeking to protect their own economic interests, could engage in competitive devaluations, trying to make their exports cheaper and gain a competitive edge. Such a scenario could lead to protectionism, trade disputes, and even economic conflict. In this new currency landscape, there will be winners and losers. Countries with strong economies, sound fiscal policies, and diversified trading partners will be best positioned to weather the storm. Those with large debts, weak currencies, and an over-reliance on a single trading partner could face significant challenges. The stakes are high, and the outcome will depend on a complex interplay of economic, political, and technological factors. In Section 4, we explore the potential for global economic upheaval. The decline of the dollar's dominance, if not managed carefully, could trigger a global economic upheaval. The interconnected nature of the global financial system means that a shock in one part of the world can quickly spread to others. A loss of confidence in the dollar could lead to a flight to safety, with investors dumping risky assets and seeking refuge in gold, real estate, or other perceived safe havens. This panic could trigger a stock market crash, a credit crunch, and even a global recession. The consequences for ordinary people could be severe, leading to job losses, falling incomes, and a decline in living standards. Governments and central banks would need to act swiftly and decisively to contain the damage and restore confidence in the global financial system. In Section 5, we navigate the unknown and ponder what lies ahead. As we stand at this critical juncture, the future of the global financial system hangs in the balance. The decisions made today by policymakers, central bankers, and investors will have far-reaching consequences. It's a time for caution, but also for opportunity. Those who are prepared for the challenges and opportunities of a changing world will be best positioned to prosper. What will the future hold? Will we see a smooth transition to a more multipolar world, with a basket of currencies sharing the burden of global reserve status? Or will we witness a period of volatility and uncertainty, marked by currency wars, economic crises, and geopolitical instability? Only time will tell, but one thing is certain: the world is changing and we must be prepared to adapt. In Section 1, we discuss adapting to a shifting landscape. The global economic landscape is in constant flux, but the potential for major shifts in currency dominance, as we are witnessing in 2024, necessitates a heightened sense of awareness and adaptability. Governments, corporations, and individuals alike must recognize that clinging to outdated paradigms could be detrimental. This new era demands a proactive approach, one that embraces change and leverages it for stability and growth. For governments, this means acknowledging the limitations of relying solely on the dollar. Diversifying currency reserves, fostering stronger trade relationships with emerging economies, and promoting domestic economic stability will be crucial. For corporations, hedging against currency fluctuations, exploring new markets, and securing supply chains will be paramount to navigating potential disruptions. The current situation is not about predicting the future with absolute certainty, but rather about building resilience and flexibility into existing systems. Just as a ship adjusts its sails to harness the wind, so too must we adjust our strategies to navigate the changing economic currents. In a world no longer dominated by a single currency, governments face the complex task of balancing national interests with the need for global cooperation. One key strategy will be to reduce dependence on the US dollar by diversifying foreign currency reserves. This could involve increasing holdings of other stable currencies like the euro, Japanese yen, or even the Chinese yuan, depending on how those currencies evolve. Another strategy involves forging stronger trade relationships with emerging economies, particularly in Asia and Africa. By reducing reliance on traditional Western markets, governments can mitigate the impact of a potential dollar decline and tap into new sources of growth. Additionally, promoting domestic economic stability through responsible fiscal policies, investment in infrastructure, and support for innovation will be essential to weathering economic storms. Furthermore, governments must work together to reform the global financial system, making it more inclusive and resilient. This includes strengthening international institutions like the International Monetary Fund, IMF, and exploring the potential of a multi-currency reserve system, perhaps even incorporating digital currencies. The key is to move away from a zero-sum game and towards a more collaborative approach that benefits all nations. For individual investors, navigating these uncertain times requires a shift in mindset from passive investing to active wealth preservation. Blind faith in the dollar's stability is no longer a prudent strategy. Diversification is key. This means holding a portion of your assets in physical assets like gold and silver, which have historically held their value during periods of economic turmoil. Real estate, particularly in politically stable regions, can also act as a hedge against inflation and currency fluctuations. Beyond traditional assets, consider exploring alternative investments such as cryptocurrencies. While volatility is a concern, Bitcoin and other established cryptocurrencies offer a hedge against inflation and centralized control, potentially becoming increasingly important in a multipolar world. However, thorough research and an understanding of the risks are crucial before investing in this space. Most importantly, this is the time to prioritize financial literacy. Stay informed about global economic trends, understand how currency fluctuations impact your investments, and seek advice from qualified financial advisors. Knowledge is your most powerful tool in navigating these uncharted waters. In an era of rapid economic transformation, financial literacy is no longer a luxury but a necessity. For individuals, it is the key to making informed decisions about saving, investing, and protecting your wealth. It empowers you to see beyond the headlines and understand the underlying forces shaping the global economy. Financial literacy equips you with the knowledge to assess risk, identify opportunities, and avoid common financial pitfalls. It empowers you to have more control over your financial well-being and to make choices that align with your long-term goals. In a world where economic power is shifting and the old rules no longer apply, financial literacy is not just about managing money. It's about navigating change and securing your future. Fortunately, there are more resources available than ever before to help you enhance your financial knowledge. From online courses and educational websites to books and podcasts, there is a wealth of information available to you. By investing in your financial education, you are investing in your future. In an uncertain world, knowledge is power, and financial literacy is the key to unlocking that power. As we've explored throughout this series, the global financial landscape is on the cusp of a transformative period. The US dollar, long the bedrock of the international monetary system, is facing challenges unseen in generations. The confluence of factors, from mounting US debt and rising geopolitical tensions to the emergence of new economic powerhouses and alternative currencies, signals a potential power shift in the global economy. The actions of elite investors, often a harbinger of broader economic trends, suggest a growing unease about the dollar's long-term stability. Their strategic moves to diversify portfolios, hedge against inflation, and seek out alternative safe havens should serve as a wake-up call for policymakers and everyday citizens alike. We are witnessing a confluence of historical cycles, economic realities, and technological advancements that are converging to reshape the global financial system as we know it. The path ahead is fraught with uncertainty, but by understanding the forces at play, we can better prepare for the challenges and opportunities that lie ahead. While the trends we've discussed paint a compelling picture of a shifting global financial order, it's crucial to remember that the future is not predetermined. The ultimate trajectory of the US dollar and the global economy will depend on a myriad of factors, including policy decisions, technological advancements, and unforeseen events. The United States still possesses significant economic and geopolitical clout, and a concerted effort to address its fiscal challenges, rein in inflation, and foster innovation could potentially bolster the dollar's standing. Simultaneously, the rise of alternative currencies and regional economic blocs could lead to a more multipolar world, where power is more evenly distributed. This uncertainty underscores the importance of adaptability and proactive planning. Rather than clinging to outdated paradigms, governments, businesses, and individuals must embrace a mindset of flexibility, constantly assessing the changing economic landscape and adjusting their strategies accordingly. In this era of unprecedented economic transformation, the ability to adapt is paramount. For governments, this means embracing a more pragmatic approach to foreign policy, diversifying currency reserves, and fostering stronger ties with emerging economies. It also requires a commitment to fiscal responsibility, sound monetary policy, and investments in education and infrastructure that will drive long-term economic growth. Businesses must prioritize agility and innovation, diversifying supply chains, exploring new markets, and hedging against currency risk. Embracing technological advancements, particularly in areas like blockchain and digital currencies, will be crucial for staying ahead of the curve in a rapidly evolving global marketplace. For individuals, adaptability means taking ownership of your financial future. This starts with enhancing financial literacy, staying informed about global economic trends, and making informed decisions about saving, investing, and managing debt. Diversifying your investment portfolio, considering alternative assets like gold and cryptocurrencies, and seeking advice from qualified financial advisors are also essential steps in safeguarding your wealth in uncertain times. The shifting sands of the global financial system present both challenges and opportunities. The decisions made today by policymakers, business leaders, and individuals will have a profound impact on the world of tomorrow. We cannot afford to be complacent observers in this transformative period. This is a call to action for all stakeholders to engage in informed dialogue, challenge conventional thinking, and proactively shape a future where economic prosperity is more broadly shared and resilient. By embracing adaptability, fostering innovation, and prioritizing financial literacy, we can navigate the shifting tides of the global economy and create a more stable and prosperous future for all. The future is not something to be feared, but rather an opportunity to be seized. By embracing the challenges ahead with foresight and determination, we can harness the winds of change and chart a course towards a more equitable and prosperous world.